This is Peter Arender. I'm Chief Investment Officer with Fortress Fund Managers. Well, this week, I think one of the bigger stories came out of the US when the meeting of the what they call the FOMC, which would be called the Fed. And just like in Barbados, we had a bit of a storm overnight last night. The Fed's announcements yesterday caused a bit of a storm in the financial markets. What happened is they've been pumping a ton of money into the system since last year to combat the economic impacts of the COVID pandemic. That involved bond buying and involved keeping interest rates around zero. And what they announced yesterday was really sort of almost a pre-announcement that they're going to begin taking away some of that stimulus in the not too distant future. Now, it's important to remember that Fed policy matters to every investment on planet Earth, probably, because interest rates matter to all financial assets. So this sort of recalibrating matters to stocks, matters to bonds, pretty much everywhere in the world. So not surprisingly, investors have some adjusting to do. This is really happening. It's to be expected that things get back to normal in lots of ways. We probably would think that you're still going to see progress in financial markets, might get a little choppier as investors adjust in the short term. But our message here would be interest rates in the US are still extremely low, still at zero at the front end. Companies can borrow tons of money at low cost. And the Fed, even as they normalize, is still very, very friendly. This supports stocks. We still like high quality, well valued global stocks for the long term. This week, the Fortress funds, I think, will be flat to down slightly. So a little change in our world. And that is it from here.